Good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. Markets have just kicked off in the Chinese markets, and we are seeing mostly red on the screen at this juncture. A50s are down about a percentage and a bit. So has these are the two futures, May and April futures, and then we are seeing Hong Kong just kicking off down also about 0.5%, and the enterprise index also down about slightly more than 1%. We're approaching month end, and I mean, it's been a good month for some of these indices. It's actually quite understandable that a little bit of money is perhaps being taken off the table. Purely because as we go into the month end, there's all kinds of reporting, window dressing sort of possibilities, and it could obviously show in the next two sessions, today and tomorrow. The big event today that everybody's watching out for is the GDP in the US here later this evening, and also the statements coming up from the decision basically on the back of the FOMC meeting today. Not a lot of people, or the market is basically expecting an unchanged move, but the tone of the message that comes and follows these announcements is what the market will be scrutinizing over. Whether the Fed chairman will be as hawkish or not, there will be obviously reaction on the back of that. In fact, reaction started last night because we saw the dollar weakness cause big moves in most of the dollar pairs. The Aussie dollar stands out, or rather stood out last night in a move here. This is actually quite a big move, and it also shows that it has managed to, after several attempts, the last few little bit or so, punched out from that, so-called 80 cents, sort of 79 to 80 cents range. Partly a reason for that has also been a rebound that was supported by the iron ore rebound, or price in iron ore, which plays quite a bit more into the Aussie dollar. But the US dollar weakness had a part to play in most of the currency pairs. The euro dollar, the Aussie dollar, and the CAD dollar, for example, actually bouncing up. Needless to say, tonight's preview of the GDP and also the FOMC will have a further part to play here. Whether this continues on the upside or maybe comes back into this range remains to be seen. Just very quickly also on one stock I want to highlight. We spoke about Apple yesterday. They came in very well. I mean, they came in with very good set of results. This was after the market, the previous session, and last night was the first night that they could react on the live market. We saw it opening up, closing down. This red, huge red or long red candle engulfing this green candle is not exactly a bullish sign. In fact, it's something which is somewhat worrying, which may suggest that we may see the stock pull back a little bit more in the next few sessions, depending on the markets in general. The last few days we've been flagging this pattern, looking a lot like this pattern. However, this resistance being one of the key resistance, if it can punch through, it can probably continue for a similar sort of view down here. If it doesn't, like it didn't last night, we may see things pull back down to close to around the so-called first support levels of call it around here, around the 125 level or so. I mean, essentially a lot of the good things in Apple is really in the price. They've got still a very aggressive stock buyback program, which would lend support to any pullbacks or sharp drops, but a lot of funds globally own this name to an overweight position. So I don't think it's going to move too much, or we don't think it's going to move too much from beyond this sort of range, and perhaps it's time that the stock probably trades a little bit of a trend, flattening out the next little while, which means that it's probably dead money if you continue to maintain positions down there. But anyway, these are just some thoughts and levels to watch for. I mean, besides that, don't expect any big moves, because I think FOMC is going to probably call the shots for later. Anyway, thank you very much. Have a good trading day.